Last night, Apple announced its result Q3 2023 earnings report. And it has beaten the street on the revenue, margin, and EPS front, earning per share front as well. And I wanted to give you a quick update on that as well and do some analysis for the numbers. Hello everybody, and once again welcome to Sinhanomics, the money machine. As we all know, Apple is an extraordinary company with $3 trillion market cap. It forms 11.62% of NASDAQ 100 and 7.5% of S&P 500. So from any angle, it's a very important company listed in the stock market, and everybody who has used Apple products will agree with me, it has a very loyal customer base. Well, let's look at the numbers. So the revenue was $81.8 billion versus the estimate of 81.69. Gross margin was 44.5% versus 44.2% estimated. And the earning per share came out as $1.26 versus $1.19 estimates. The net profit actually grew 2.3% year over year. So it has actually given a beating, or the street, it has beaten the street rather, on the revenue, gross margin, EPS front. But if you look at the stock price right now, is trading $5 lower, something like 2 to 3% down. What market did not like? Market did not like that it didn't meet the expectation of the iPhone. So I'll come to that a little bit later as well and analyze the segments. So if you look at the segments, actually the iPhone still forms almost 50% of the business for Apple, and the revenue was 39.67 versus 39.91 estimates, and that's what the market is not happy about. Guys, this is giving a big opportunity for investors to buy. Well, let's look at the other segments. In fact, if you look at the iPad, for an example, iPad actually declined. The revenue was 5.8 billion versus 6.4 billion estimates. And the MacBook also a little bit declined as well, and it came at 6.84 billion versus 6.62 billion. Better than the estimates of the street, but year over year it was a decline. And one of the reasons given for that was basically after the pandemic. Everybody knows that there was some challenges Apple had in the supply chain, and there was a spike in the supply pretty much in the same time last year, and that is actually impacting the year over year growth perspective. But hey, who are these analysts who are not rationalizing it, who are not normalizing these numbers and reacting on that? I sometimes feel really awkward on the wisdom of some of these analysts. Having said that, guys, there's a bear and the bull scenario in the stock market. If everybody becomes optimistic, everybody becomes bull, who is going to sell it? The price will skyrocket. So whatever is happening is good. It gives people like me and you an opportunity to buy at a lower price point. Well, the most important segment was services. It did not only actually exceed the analysts' expectation. They were expecting $20.76 billion revenue from services, but actually it has come out as 21.21, and which was an 8% growth year over year, guys. And if you look at the continuously, it has been growing. So in Q2, it grew at 5.5% year over year. In Q1, it grew at 6.4% year over year. It has 1 billion, right now it has 1 billion paid customers. And guess what? the gross margin is a whopping 71%. Yeah, many of you must have fallen off your chair to hear that a product company is giving a 45% gross margin overall, and the services, which is now 25% of the total revenue, is actually at 71% gross margin. I personally see it's a fantastic story. The other segment, the others business, which has all the variables and everything, that was at 8.3 billion versus 8.4 billion expected. So if you really look at overall, pretty much it has beaten the market expectation from the revenue, gross margin, EPS perspective. Now, let's look at a little bit the analysis, and let's analyze the company and its future growth potential. First of all, let's look at the brightest spot, guys. But before I go to that, the brightest spot is services, by the way. Let's look at iPhone. So iPhone actually declined just around 1%, which is nothing in my opinion. If you really look at overall smartphone market, the Android has actually declined much more than that. So that way, in fact, Apple is gaining the market share in the smartphones space. And if you look at the others, I actually explained that to you, especially for the MacBook and the iPad. There has been decline, of course, and Apple thinks that it will further decline, or it will continue the decline year over year in the Q4 also, for the same reason. There was a spike in the shipment last year after the pandemic, and after Apple actually fixed their supply chain challenges, mainly coming from China. That's one of the reasons now Apple is setting up its factory in India, already set up its factory in India and Vietnam to spread the risk. Having said that, if you look at the services, it's a really good story. So what are these services, guys? I personally feel that Apple is transforming itself, or one portion of that, pretty much into the financial services sector. Other than the normal services, it has actually Apple Pay. It has now started the savings account. It has the Apple Card. It has credit card as well. So pretty much expanding into the financial services segment. And that's the reason the gross margin is a whopping 71%. And the year-over-year growth is 8%, guys. So with 21.21 billion quarterly earning, pretty much it's coming as $85 billion annualized revenue, which is roughly 25% of the total company. An iPhone at 50%, just iPhone and services account for two-thirds of the company's revenue. I personally see, if you really look at that, 7 to 8% growth with the normal rule of 72, pretty much in next 10 years time, it will exceed $200 billion revenue. It will double. In fact, it will be more than double. And with 70% gross margin, it will actually going to be a big cash cow for Apple. Well, the other bright spot which I see here is the India story. Everybody is bullish about it. Even Tim Cook actually mentioned that he's quite bullish about India's story. There has been significant growth in the numbers there. And let me put things in perspective for you. So India's story is pretty much unfolding like China. In 2010, China revenue was $3 billion. And in 2016, it was at $59 billion. Yes, you heard that right. From 3 billion to 59 billion. 56 billion was added in 6 years time frame. And that was roughly 20% of Apple's total revenue. You are going to see the similar story in India. India is going through an inflection point of the per capita income perspective. Right now it's sitting at around $2,500 US, and which is expected to grow to 4,000 in 5 to 8 years time. And if that happens, the discretionary consumption increases. And that's what's happening in India, by the way. India right now, Apple revenue from India is around $12 billion, which is roughly 3 to 4%. And in next 5 to 6 or even 10 years time, if you look at that, it's going to be, in my opinion, 50 to 60 billion dollar. That's my calculation, and I'm basing it based on the China and also the per capita income increase. And you can actually look at the nominal growth rate, 16%. So if you combine all these maths, you can actually come out to that very easily, 50 to 60 billion dollar. Not only that, in fact, Morgan Stanley is also very bullish about India. They think India will be a major part of the total revenue growth for Apple. And that will form almost like 15% of the Apple's revenue growth. Morgan Stanley estimates that in next 10 years' time, $40 billion will come from India as compared to my $60 billion. But let's listen to Morgan Stanley. Well, Deutsche Bank is also thinking about re-rating it. And some of them, for an example, Bank of America, they have already increased their target to 210. Dan Ives of the Wedbush Securities has already increased the target from 220 to 230. Gene Muster of the Deepwater Asset Management is also pretty bullish about that. So I think there is a bright future for Apple, and any dip which you are seeing in the market right now is a golden opportunity to grab it at a price sub 200. Because if the market continues to go up, and once the interest rate continues to go down, and just now there has been the wages and the labor market rates has come in labor market data has come in US, and looks like US is pretty much slowing down. So to me, looks like the interest rate increase is pretty much over, guys. Very soon you'll see either getting stagnated or going to cut. And once that starts, consumer spending will push up. And companies like Apple is going to be benefited, which we saw also in the Amazon. Amazon retail is actually picking up big time. And I'll cover Amazon in the next video. Today, I just want to talk about Apple. So from the balance sheet perspective, as well as I told you, is a solid company. Cash and cash equivalents, $166.5 billion. So guys, earning per share, I'll repeat that, $1.26 versus $1.19 market expectation. So if you really look at Apple overall as a company, it's kind of a really stable company from the earnings perspective. And if you don't believe me, go and look at Apple's price chart, guys. It's investors' delight. You'll see it's a rectangular. In a rectangle, if you put a diagonal, that's what it shows. It's a compounder. It's a continuous compounder. It's a must-have in your portfolio. As compared to Nvidia or Tesla, which is growing much faster, but they are pretty volatile. In one day, they can go $10, $20 up and down. But if you look at Apple, even after this result, if some of the bears don't like it, they are not able to sell it below $10. It's right now sitting at around $3-4 down. And once the market will digest all the news, again it will go up for the next run. One more thing I would like to highlight is the Vision Pro. People are discounting Vision Pro. In fact, Tim Cook did mention that AI is something that Apple has been investing heavily throughout. And Vision Pro and others are actually an example of that, or a result of that. So guys, once Vision Pro will be in the market in 2024, I think all the consumers will be pretty excited. The guys who have tested them, I have not. Based on their report, it's amazing. And not only that, if you look at the Meta, which is Facebook, Meta platforms have reduced their investment in the metaverse and trying to focus more on the AI. Probably they have understood that as compared to Vision Pro, they are right now nowhere. And that's why they are investing heavily on the AI side to develop a much better Vision Pro type of headset. for the augmented reality or the virtual reality space. And that's why they are kind of balancing their investments in that. Well, with that, my guess is in 1 year's time it should be at $250. This is my analysis. And guess what? I had talked about Amazon, that it will be $150 by the end of this year. Right now it's trading at $140. I had talked about Tesla, that it will hit $300. Actually it hit $291 and then dropped down. So just wait for another 6 months and you'll see all these magnificent 7 doing wonders for you. With that, it's a goodbye from your friend, your financial guide, Pankaj Sinha. Remember, all these are my personal opinion. Please consult your financial advisor before making any investment decisions. Guys, Sinhanomics is a channel to create awareness about finance so that you can analyze your own companies and make your own decisions and make money. With that, if you like this kind of content, don't forget to like, share and subscribe. With that, it's a goodbye from me. Bye-bye.